Oh, you're muted.
Oh man, I was muted and I forgot it. Okay, so I started recording and yeah, I was just introducing myself. I'm Tchello. I'm one of the master gardeners here, and we have bi-weekly Tuesday classes now. And today's topic will be like macro analysis, how to analyze something over the long term and some of the trends we see, especially in the crypto market. Okay, yeah. So let's get started. Okay. So I have a few topics here on the index, Bitcoin index chart, which shows like the all-time history of Bitcoin prices. And these are the topics I want to cover today, okay? So the first one to macro analysis, I think, and the most important one, besides like looking at trends and all of that stuff, is just if it's not like a very established coin, if it's a newer or maybe smaller coin, is looking at the use case, not necessarily if you're interested in it, but how much room does it have to grow compared to similar projects or like the counterpart to it in the like traditional finance and traditional economy. So a few examples we have of that is, for example, Uniswap versus PancakeSwap and Solana versus AVAX, or maybe those gaming coins and the gaming industry. Okay, so how do we do that? How do we compare those things? We can compare by price, right? Because Solana is trying to compare with AVAX, but would you say that AVAX price is going to go to 200 really soon just because it's kind of competing? Or for example, Phantom is also competing with Solana. Do you think Phantom is going to hit $200 and it's now like at $2.3? So we can't just compare the price, right? Because there are some other factors at play. And like the more traditional way to do it, and I've included like a calculator for that in the trading, the holding spreadsheet that we have. You can go to the resources channel on our Discord, and it's one of the pinned messages. You can make a copy of this specific spreadsheet, and it has like all those tabs we've covered in the past. And this price projections tab is new. Okay, so for this, for any coin that you may be interested in that you're tracking, you can calculate, for example, let's say I'm into cake. So I'm going to go back into the entries and exits page, which is where I'm interested in putting the coins I'm going to look at. So I'm going to put cake right here. Okay. Then I'm going to go to CoinMarketCap, and every single time it's this cryptocurrency called Zoo, which is a very, very bad shit coin. Okay. And like I searched for it once, and every single time I search for CoinMarketCap, this is the default website. So, okay, I'm just going to copy the link right here and paste the link right here. So as you can see now, sorry, actually, I had to do it like this, and I have to replace the name right here. Okay, so as I switch this, you guys can see the like cake price is live here, and also you can see the cake market cap right here. It shows up right here, and also it's circulating supply. Okay. Now, why does that matter? Well, let's say, for example, I want to compare cake to Uni. Okay, so Uniswap. And then I copy the Uniswap link and I paste it right here. Let's say I think like cake is a very interesting project, and it should have maybe at least 20% of the Uniswap market cap. Okay. And actually it has a little bit more. So let's go for a higher number. Let's say I think it should have at least half of the market cap that Uniswap has, right? And this is the number. So I just copy the number right here, and I paste it under projected market cap. And oops, sorry, I have to go here, then copy this number right here, and then I paste it right here. And let's say right now the circulating supply is at 243 million. Now, Cake specifically doesn't have a max supply, so this tab right here doesn't really work for it. But since it's at currently 243 million, let's say it increases a bit to say 300 million, okay? So if it has that market cap and that circulating supply, then the price would be approximately $23.20, okay? And that's the simplest way of projecting a coin price into the future. Now, as you can see, this is very subjective and it's more of an art than a science, right? Because there's not a specific formula to see what projects you should compare and what percentage you should take. Now, a YouTuber called Investensors, he does this a lot and you can watch the videos for him, but it's really a matter of, I think, seeing how people do it and then getting the main ideas from that, seeing where it could compare. So for example, another comparison that you could make with Cake. So you could take like the Uniswap market cap compared to the Ethereum market cap, and then do the same percentage, but with BNB, since PancakeSwap is on the Binance Smart Chain. So this is a good example, and that could lead you to a different projected market cap. And well, there are many ways, but this is the most basic, okay, to project it into the future. Okay, so secondly, you're looking, and this is one that I think is very important, you're looking at how it trends when it's compared to the main cryptocurrencies, including the ones that it is similar to, okay? So recently, you might have seen Ben Cohen, he made a video called "What If It Bleeds Against Ethereum?" And the video is very interesting and very thought-provoking, and I clicked this by mistake. Let's go back to the Bitcoin chart right here. What if it bleeds against Ethereum? Meaning, what if the altcoin you're trying to buy and you're thinking about investing over the long term, it's just massively outperformed by Ethereum? Now, there are many great examples of that. Let's say, for example, Litecoin versus Ethereum. So we have right here, Litecoin, Ethereum. And as you can see, basically permanently, except for very small periods of time, basically permanently, it's just trending down, right? Now, not all coins have an Ethereum pair. So if you search for Cake Ethereum, you'll not find it, right? Now, one thing that you could do is use the TradingView spreads function. So you would type, for example, Cake divided by ETH, right? And then you go to Cake to USDT and Ethereum, let's see, Ethereum USDT, right? And again, right here, now Cake has a very small history, but as you can see, it also bleeds against Ethereum, right? And well, that's up to you to evaluate. Are you willing to take on the risk of holding this coin, knowing that if you bought Ethereum, you would probably gain more money? Now, Cake, for example, it has some pretty nice interest going for it. So if you go to PancakeSwap, you can stake your Cake, and I think the currently APY is about 70% a year, and it auto compounds. So, and yeah, I think, no, this is not a scam. Okay, I was thinking, so this is also a very important safety thing. When you search for the like an exchange or anything on Google, always check if you're using the true URL, okay? Because many times, like malicious ads appear right here, and sometimes you don't have ad blocks installed and it doesn't block the ad, and it's just a scam. And as soon as you connect your wallet, it just drains your entire savings in crypto, okay? So be very careful about that, okay? So, okay, PancakeSwap right here. And if you stake it, let's see if you can see it without without connecting my wallet. It's loading. No, forms is liquidity pools. Okay, pools. It's been a while since I accessed PancakeSwap on my computer. I usually do it on my phone. Okay. Doesn't it show it? Oh, let's see. Yeah, it's not showing up, but currently it's about 70% a year. Now you have to consider this into this calculation, right? Because if it's also generating some interest for you, then it might be worth to take this risk of it bleeding against the Ethereum, because the gains you make in it might outweigh it, and maybe it goes sideways a bit and up a bit. And if it goes up, then it like multiplies your gains, right? Because you're usually receiving interest in the coin that you're staking. Okay. Okay. Now you can not only compare it to the main cryptocurrencies, but you can also compare it to similar cryptocurrencies. So for example, we can see Cake versus Uniswap. So here it is, Cake divided by Uniswap. And I have a little chart right here, and it's on log scale. And as you can see, Cake and Uni, they kind of go maybe sideways almost all the time. It goes up a little bit, then it goes down. Now, sometimes it's also interesting to see the inverse, because if we see the inverse of this, so it would be Uni divided by Cake, makes a little bit clearer what are the moves that we are seeing. Okay, so in Cake versus Uni, one thing that we notice is that first, Uni has a big impulsive move against Cake, right? It goes up by a lot. But after that, Cake has a really impulsive move against Uni. Now, this is a single occurrence of that. So we cannot conclude that this is a pattern that will repeat all the time. But it is something interesting to notice what are the patterns that it plays against the similar tokens. So from this, I could like maybe infer that whenever Uni makes a run, Cake waits a little bit, and then it makes a run just as big or even bigger in this case over Uni. Okay. So this is also a good point to take into consideration, how it's performing against not only the main coins, so against Bitcoin and against Ethereum, but also against the coins that it's similar to. Okay, what's the trend? Is it just going sideways? Is it highly correlated and going sideways? Is it constantly outperforming and like in a long-term uptrend? Is it constantly being outperformed? So in a constant downtrend. So this is a very important thing to look at. Okay. Okay. So next, looking at the long-term trends. So moving averages and their slope, and if they have acted as support or resistance recently. Now, for these, is more important to look at the longer term moving averages. So you will not be looking at the 4-hour moving averages or something like that. Okay. And this is one of the indicators that I have coded. Okay. So maybe it takes a little while to show up in TradingView, but you can search for my other indicator. So if you search for DXY, and you'll see right here, DXY in relation to MA, so Tchello right here. Then you can just click my profile and go to scripts. And here it is, trend-based color for any asset at any time frame. So what this does is that it colors the chart based on if it's above, below, or testing a moving average. So by default right here, not by default, actually, the settings that I have right here is the 20-week moving average, right? For Bitcoin in this case, so I'm not changing it to a custom symbol. And I have like a tolerance of half a standard deviation. Now let's see what that actually means. So what I'm actually doing is, in this specific case, using the Bollinger Bands, but with this standard deviation multiplier right here, I have it set to 0.5. And as you can see, when it's kind of testing the moving average, it goes yellow, right? When it's above the moving average, it goes kind of blue. And when it's below the moving average, it goes kind of red. Now, there's also the secondary colors. So when it's coming closer to the moving average, it goes darker. And when it's pulling further away, it goes like lighter. Okay. And same goes right here. Okay. Nice. Now, if you go through other assets, so for example, let's go to Cardano. And this is the futures contract, so it will not be as good. Okay, let's go to Bitfinex. Bitfinex hasn't listed it that long ago too. So I think the oldest one is on Binance. Yeah, okay. And we put it into log scale, and let me just delete the drawings I already have. So we make this cleaner. Okay. As you can see, this shows the moving average of Cardano. But the real powerful thing about this indicator, in my opinion, is that you can use the moving average of any asset. So let's see how it relates to Bitcoin, for example. So we all know that, and as we've seen right here, if we go to the Bitcoin chart, usually when Bitcoin is above the 20-week moving average, it's trending up, right? And if it tests it as support, as it did right here, if it tests this at support and right here, then the uptrend is more confirmed, right? Well, how does Cardano look in light of that? Cardano USDT. Well, we can see also that when Bitcoin is trending up, Cardano is also trending up. And when Bitcoin is trending down, then Cardano is also kind of trending down. Okay. Now, this is obviously not a one-to-one pattern, but it's something to watch. So what is the overall market trend, right? And you don't have to use the moving averages for this. And sometimes it's even better not to, right? So for example, let's say I want to see the trend in the stock market. So I go to the SPX. Well, it's kind of not as good to look at that, because if you go to the stock market, it's basically only doing this, right? It's basically a line up and to the right. So it's basically never gonna go below the moving average, except in a very rough crash like we had right here. So for example, in the stock market, maybe what would be smarter is to actually go to the chart, right? And maybe look at the long-term chart and see if it's starting to kind of slope down, then you might be more careful with your investment decisions in crypto, okay? Now, one thing that I think is very, very interesting is to see the Ethereum chart and compare it to Bitcoin, above or below the moving average. And Ethereum is one of the ones that is the most correlated to Bitcoin. So as you can see, the correlation right here is one of the most powerful ones that we see. So again, Bitcoin trending up, Cardano trend, Ethereum trending up, right? And Bitcoin trending down, Ethereum trending down. And it's a really, really powerful correlation. Another thing that's pretty interesting is to see the Bitcoin dominance in light of Bitcoin above or below a moving average. Let me just hide the Bollinger Bands. And as we can see right here, when Bitcoin kind of goes down a lot, the Bitcoin dominance is going up, which means that Bitcoin is falling less than most altcoins, right? And this is a pattern that we kind of see all the time. So right here, we saw this. Now, right here was a brief period, but it didn't move much. It was basically going sideways at 70%. So Bitcoin was accounting for 70% of the total market cap of crypto. And remember, this is a weekly chart. So if you go to the daily chart, then you might think it's wrong, but it's because I'm looking at the weekly chart, since this is for macro analysis, okay? And again, once again, it happens here. When Bitcoin is trending down, then Bitcoin falls less than the altcoins. And this kind of goes into the market cycle theory that usually the money flow goes first to Bitcoin, right? So the first one to go up and the one that goes up the most at first is Bitcoin, and it outperforms most altcoins. And we've seen that in the past, and we'll probably see this into the future, right? And then it goes to Ethereum, and then to the smaller caps. We'll see better comparisons for that in just a little bit, but take this idea and kind of think about it as we talk, okay? So a second thing that's very interesting is looking at the US dollar trend, okay? So let me just plot this right here. And this is kind of doing the same thing, very similar thing, but it's not using the standard deviation as a buffer, and it's using the US dollar index. So let's go to the DXY, which is the US dollar index. And let's just, again, delete the drawings. And we see as it goes below the 20-week moving average, it's trending down. And as it goes above, it's trending up. Now, if you go to the extremely long time frames, then you'll see that the US dollar is in a basically perpetual downtrend, right? And well, I don't think that's very surprising, you know, knowing about inflation and all of that stuff. But on the midterm, or this is actually the long term, and this is the mega long term, I would say. So over the long term, it has little bits of ups and little bits of downs, but it's generally trending down, which also gives more strength to Bitcoin. Now, as you can see right here, it's just plotting the DXY over DXY and the difference to the moving average. Okay, so one thing that I've also done is to kind of normalize it, make it, you know, just flatter based on the standard deviation. Now, it's not using the standard deviation as a buffer. It's just using this to make it flatter. Now, for the DXY specifically, it doesn't make that much of a difference. As you can see, it kind of stays the same. But for one other indicator that we'll see in just a bit, it makes quite a meaningful difference, okay? So, all right, let me go to 1 week right here and 20 week. Okay, now let's see how the Bitcoin chart looks in light of that. And this is also a pretty interesting thing that we can see, that usually when the US dollar is trending down, it potentializes a move up in Bitcoin, right? So if Bitcoin is already moving up and the dollar starts moving down, then that move up becomes more powerful, as we saw right here and as we saw right here, for example. And if Bitcoin is trending down already and the dollar starts trending up, then that move down can be also potentialized. Now, again, this is not a perfect correlation, right? So it's not just because the US dollar is going down that Bitcoin has to go up, but some people try to make it sound this way. It's not like that. It's not a perfect correlation. And I think the more interesting way to think about it is it just potentializes a move in Bitcoin if it's moving like favorably to it, right? So in this case, right here, for example, Bitcoin is going up by a lot, but the US dollar is also trending up. Now, you might find that weird, but also, well, you can also say, well, when the dollar starts trending down, then we might have even a more explosive move up, right? Now, one thing that I found interesting with this normalized version, this kind of flattened down version that I make, is that the divergences it prints are quite significant. So right here, we have, and since this is inverted, so when it's trending down, it's below, and when it's trending up, it's above, then a bearish divergence would be something like this, when you have a higher high right here and a higher low right here, right? And as you can see, a bearish divergence right here, right? And it goes down. And right here, you can kind of see it too, right? So it's kind of going up from here, but it's a little bit over, as you can see, if you just draw it as kind of a peak or a curve, you'll see that the curve is a little bit lower, right? And then it goes down. And same goes for bullish divergences. So for example, right here, let me see where were the bullish divergences. So right here, we have, for example, a lower low right here and a higher high right here. And then it goes up by a lot. And this is quite weird. And I'm not saying this is like any trading strategy that has been proven or anything right here or anything like that, but it's pretty interesting. And I've noticed this recently, and obviously we need to study it more to see how it works and what is actually happening, like the underlying conditions and all that stuff. Okay, but it is also an important factor to look at. How is the dollar trending? Okay, now the crazy indicator that I want to show you is when you change this to this ticker right here. So it's the CHN LOR SGP NOS TSAM. It's quite a mouthful, I know, but I think you guys will also see it's kind of crazy. Okay, so what this is the China normalized. Let's see if it shows up. Where is it? If you search for leading to, I think it appears. Okay, right here. Leading indicators, OECD reference series, gross domestic product, GDP normalized for China. So this is basically calculating the gross domestic product for all countries in the OECD, and it kind of normalizes it for China. Now, I don't exactly know how this specifically is calculated. I searched for it a lot and I couldn't find any specific documentation. But let's see what happens when we add it to the chart. It's pretty crazy, right? So when Bitcoin is in a bull market, it's one color. When it's in a bear market, it's another color. Bull market, one color. Bear market, another color. Bull market, one color, and the bear market is another color. Then it flips color basically at the bull market. And now you might be worried saying, wow, this has predicted the bull and bear markets for what? 1, 2, 3, 4, 5, 6, 7 times in a row. And it's now showing that we are in a bear market. That's where we need to be a little bit more careful, okay? Because this indicator, it is only calculated monthly, okay? And for some reason, the Fed has not released the data since September. So currently, if you toggle this right here, the gaps, it just shows the data that it has, not the data it is filling in, okay? And as you can see right here, this is just the data that we have, and we need to toggle the gaps just to just for it to work, because if we don't, it doesn't work since it's calculated monthly. And it hasn't updated since September, right? Or the end of August, actually. And so it's now showing up as blue, but it's because there's no data. So I think no need for concern. And as you can see, when it is in an uptrend, Bitcoin kind of goes up with it. And when it is in a downtrend, then Bitcoin kind of goes down with it, right? This is a very, very interesting indicator, and literally no one else ever has talked about this. And I've searched pretty thoroughly on the internet. Like the only information that you get, if you search for this symbol right here, or if you search for China normalized, basically is just the St. Louis Fed chart of it, right? And it doesn't even tell you how it's calculated. And I tried to find some more info to make this more complete, but I simply couldn't find it, okay? But this is something very interesting that I think no one else has talked, and that you should also pay attention to. So let's toggle off the gaps. As long as it's trending up, and try to check if there's new data or not. As long as it's trending up, then it kind of seems like it trends up together with Bitcoin. Okay, and it trends down together with Bitcoin. Again, this is a pretty crazy chart. There's more study to be done. Unfortunately, there are very few resources on the exact calculations that make this indicator, but we have to work with what we have. And yeah, this is just something I'm very proud to have discovered by accident. I was just like kind of messing with the indicators, searching for all sorts of indicators in TradingView, the economic indexes. So I was searching for example, the money stock. Now, money stock is always above the average because the Fed is printing like crazy. So I was then searching for inflation, and then I searched for GDP, and I ended up getting to this China normalized GDP, which is very, very interesting. Now, the last thing that I think is important to understand is, as I said, the market cycles, how the money flows from one type of asset to the other type of asset to the other type of asset. Again, money usually drifts towards Bitcoin in the bear markets, right? So people start selling their altcoins and buying Bitcoin because they think it's safer. And usually we see that the altcoins drop way, way more than Bitcoin. And one easy way we could do that is if we search the Bitcoin market cap, the Bitcoin market cap right here. Let me just toggle off the indicators right here and maximize it. And yeah, this is a pretty nice visualization I had. And then we can compare with total 2. Same percentage scale. Okay, so we need to zoom in because obviously the alts at their peak, they gain way more than Bitcoin, but we can see something very interesting happening here. So during this point in time, Bitcoin is outperforming the altcoins, right? Until it reaches its peak. But the altcoins only peak 21 days later, in this case, in 2017. So again, the altcoins usually run after Bitcoin, and their peak is usually after the Bitcoin peak. In this period right here is when you see, all those altcoins that you've never heard about going up 1000x. And if you're seeing very, very small cap altcoins going up like crazy, and it's happening really frequently. It's not like once in a while. It's, every single day you're checking Cointelegraph and it's saying, look at this new altcoin and it has gone 1,000 times up. It might be the signs that the market needs to cool off a little bit, right? So historically, that's what we've seen. So again, in the bear market, as you can see, when you get to the bear market, Bitcoin doesn't suffer as much as the altcoins do. And when you get to the bull market, at first, Bitcoin outperforms the altcoins, right? Usually Bitcoin outperforms the altcoins. Now, again, in the past bull run that we had, Bitcoin first outperformed the altcoins for a bit, then it reached its peak, and 28 days later, the altcoins reached their peak too. So this is just further evidence. And again, right here, you can see Bitcoin has kind of outperformed the altcoins for the last times. Now, the altcoins seem also to be going up a bit. If we check the Bitcoin dominance chart recently, and we just delete the comparison right here. Recently, if we go to the daily time frame, for example, they have had a small push up right here, right? They have had a small push up and a small, so when the altcoins push up, the Bitcoin dominance goes down. So they had a push up right here from October to kind of November, which is when we started to fall. Then when we fall, Bitcoin rises up and it like the Bitcoin dominance rises up and Bitcoin suffers less than the altcoins. Then when Bitcoin starts trending up for a while, it goes sideways, and then the altcoins start outperforming Bitcoin. And that's usually the cycle, right? The Bitcoin goes up, then the altcoin goes up, then Bitcoin comes crashing and the altcoins crash way more. So this is the cycle that you should have in mind, I think, for the long term, okay? Is that you're gonna first, in the bear market, accumulate Bitcoin first and foremost. It should be, I think, and this is not financial advice, but I think it should be at least the majority of your portfolio. So at least 51%, I think. And then you start once the bull market kicks in and Bitcoin has been performing well, but it goes kind of sideways, then you start getting more exposure to the altcoins. Okay. And then you switch to cash back when everything has gone up. And there are many ways to quantify risk, right? There are the risk metrics that I've showed like a bunch of times from this guy called Jay. He has a YouTube channel called Daily Crypto Analysis, and he just gives his risk metric, which is very similar to the Ben Cohen risk metric. He just gives it for free to anyone that enters his Telegram channel and fills out a form. And it can help you quantify risk, right? And for Bitcoin specifically, another model that's free is called the Bitcoin logarithmic growth curves. And it's just plotting like a logarithmic regression, but this regression specifically, it also uses a logarithmic scale on time. So it just kind of compresses with time, right? And as you can see, this is very similar to a risk metric too. Usually when it's above 0.5, it's where you should consider maybe start selling, and you sell more once it gets to the higher values. And usually when it's below 0.5, it's usually when you want to start buying, when you want to accumulate Bitcoin, for example. Okay, so these are the main ways to quantify risk and also to do some sort of macro analysis. Okay, so yeah, it's been about 35 minutes, but I think the class has been pretty dense. So if you guys have any questions, any stuff you want to talk about, the indicators, and yeah, I can answer them now.
I have a quick question. I know that what's available in trading view is dependent on what level of account you have, because I don't think I have access to those. So I'm wondering what your account level.
Mine is free.
Do you have,
I will never.
You're just using the pre?
Yeah, I will never pay for TradingView. That's like my principle. I will never. Man, it's too expensive. It gives you basically nothing, right? It gives you basically nothing, and it's really, really expensive. Like if it was $2 a month, then I would pay. But like, it's really too expensive, dude. It makes no sense.
Okay.
And yeah, my account is free, and like this specifically, it has the little E right here, and that's because it's only updated once in a while, right? And that's not dependent on paying or not. That is, it says right here, updated once a day. It's not true, right? It's updated maybe once a month if the Fed is feeling like it, right?
Oh, yeah, they've been getting stuff wrong lately.
Yeah, so, well, that's about it.
Okay, I had a question relating to statistics you can get on coin market cap. Specifically, do you know what fully diluted market cap means and why it's more than market cap?
Okay, so fully diluted market cap is if like all the possible coins. So if the coin has a max supply, what would be the market cap if the price stayed the same and all of the coins that we can have were in circulation?
Oh,
right?
So like everything that would be mined in the future.
Yeah.
Like
so
for example,
yeah, for example, in Bitcoin, it's taking the 21 million, right, and multiplying it by the price. Whereas the market cap, the usual market cap, it's just using the circulating supply and multiplying by the price.
So how would they do that with coins like ETH that don't actually have a set cap?
I don't think they do. Oh, they do. Huh. I'm not sure. Let's see. If the max supply is null, then it's price times total supply. And yeah, in this case right here, since ETH burns some coins, it has burned a little bit of ETH. So the total supply is now a little bit higher than the circulating supply.
Mhm.
Any more questions? Let me check the chat. Okay.
Where was that spreadsheet that you showed earlier? Where was that in Discord or?
Yeah, you can find it in Discord. It's under the resources channel, and it's one of the pinned messages. And I mean, you can just make a copy for yourself and enjoy the spreadsheet. I have made like a bunch of stuff in it. I recommend you watch the specific class where I introduced it, just to get to know all the features, because I think if you don't watch it, then it might be a little bit confusing.
Okay.
Yeah, Maria said right here, they have a Black Friday sale on TradingView. Again, I'm against paying for TradingView, okay? I propose we go on strike, all right? No one should pay TradingView membership until they lower the prices, because right now, at least for me, like living in Brazil, it's 50 Brazilian real a month. So would you pay $50 for the lowest tier plan? And that's
No.
on discount. That's on discount. That's on 60% discount. I mean, it makes no sense, dude. I would rather spend that money and buying some Bitcoin. Okay.
That's a lot higher than what we're looking at.
Yeah, and then I mean,
in American dollars.
for the lowest tier, then the lowest tier doesn't even give you that much. It's the lowest tier is basically features that TradingView removed from people just to be scummy, just to charge people for them later. Because it's features like you could have different color flags. I mean, why would you make this paid? Okay, I mean, it's not costing them anything, making a flag different colors. It's not costing them anything. If it's more indicators, okay, that's more computing time and they do it in their servers. So that I get, but those features that are just like quality of life, it makes no sense to me for them to make it paid. Any other questions, comments, suggestions for next classes? No? Okay. If anyone has any questions at any time, including people that are just watching the recording, you can ask me. Like, I'm online on Discord most of the days, and like for most of the day and most days I'm online on Discord. Okay, so I'll probably answer a question. All right.
I do have have you ever looked into like the gaming stuff? Like, what is it? Those AVIX, was it AVIX?
So
Axie, whatever, and the sandbox.
I mean, I personally don't have anything in those gaming coins, okay, because I think now it's a bit too late, because most of them have boomed like quite a lot. And I mean, I'm not buying something when it's right here, right? But yeah, I mean, I think the best comparisons that you could make, for example, in gaming coins, would be between projects, right? So like, let's say from Eng to Mana or other coins like that. And you have to make a distinction, because on gaming, there are like many different types of coins. So there are coins that only work for one specific game, and there are coins that are from a platform of games, right? And those are a bit different. If you try to compare one to the other, then it's an unfair comparison, I think, right? And also, one comparison that you could make is if you go to CoinMarketCap, you can go to cryptocurrencies, I think, and then you can just select by category. So let's say, for example, metaverse, right? And
I didn't see that. Yeah.
And then you compare like the total metaverse market cap to the gaming market cap, for example, right? And then you take, for example, let's say Decentraland is, I don't know how much percent of the total metaverse market cap, let's say it's 10% of the total market cap, then you say if the market cap, the total market cap of metaverse was, let's say, half of what gaming is, and Decentraland was 10% of that half, how much would it cost, for example? So that's another good comparison that you can make. Any more questions?
Do you ever look at looking at supply to see, like, I think there was a chart that you said or showed once that had, if, what was it, long-term holders and short-term holders? Do you ever look at that a lot for like Bitcoin to see who's holding and selling? And
Yeah, for Bitcoin specifically, it's very, very good to use the on-chain metrics. Now, I'm not checking them like daily. I usually just have like a Telegram bot, for example. There's one called, I think, Crypto Coin Alerts that just sends you, for example, just like inflows and outflows from exchanges. That could be like a pretty nice indicator, especially for shorter term moves. And like for the longer term stuff, most of it is paid on Glassnode, and it's like $700 a month. So I'm not paying TradingView. I'm not paying Glassnode either. Okay. And yeah, so for those, I usually just kind of look at the Will Clemente newsletter. So I'm not the biggest fan of his newsletter itself, right? So what he writes, I think sometimes he's a little bit too bullish. Okay. But what he gives is a good snapshot of what the metrics look like at that day. And that can lead you to some other interesting analysis. Let me just open up the latest one on my email, and then I can just share it with you.
and you don't pay, I'm guessing, does he charge for that or?
No, it's completely free, right? It's completely free. And I mean, I honestly, like, I respect him for it. He's making free content. And one thing that he has been saying lately is that he will make like a dashboard with indicators he uses available for free too. So we might be getting the indicators he uses for free. So right here, Blockware Intelligence is his newsletter. Let's see the latest one. So right here, week 15. So he shows you some of the paid Glassnode metrics. So right here, it's the entity adjusted SOPR. So if people are selling at a profit or a loss, so if this one specifically, it's adjusting it for entities. So for exchanges, for example, if when exchanges move coins from one place to another, it might not be a buy or a sell, right? And actually all moves may not be buys or sells, but since exchanges are just moving so much money and so frequently, then it introduces some imprecision to the chart. So right here, and this is pretty interesting. And in this point right here, I think this is something very interesting to watch here. So let's see the specific image. And he's saying right here, in a bull market, when we test like the one level, so when it comes close to people selling at a loss, if we don't go below it, then it's kind of confirmation that we're heading higher, right? And if we break below it, then it's confirmation that we might have lower or consolidate at lower prices for a while. Okay, and yeah, this is paid, but you can have a snapshot right here, for example.
It's almost better that you get a chart with commentary or an explanation, because you know I've looked at Glassnode and I didn't know what I was looking at.
Yeah, sometimes it can be pretty confusing too. This is something that I really believe in, that Glassnode, they sell themselves as this magic thing that as soon as you sign up, you'll have access to this incredible data that will tell you exactly the tops and bottoms. But it just gives you raw data with very short explanations, right? And you have to interpret it by yourself. So If you're paying $700 for a Glassnode, thinking it will, make your performance go way up, it probably won't, okay? Unless you've been studying on-chain analysis for a long time and your account is enormous, because $700 a month, honestly, if you put that into Bitcoin, if you just put that into Bitcoin, then you're probably gonna make more money than you would make just by signing up to Glassnode, okay? Well, that's about it. Almost an hour. Any other questions? Maria?
Yes, do you check the leverage often?
Yes, the leverage, it's something more for the short term, okay? And the way I like the most to check like leverage and that stuff, there are two main websites. Now, there's one that was called BuyBT. Now they have rebranded to coinglass.com, okay? And in this charts, in this site specifically, this website right here, you can see two things that I think are the most important in this website. So you can see the total amount of liquidations, and you can also see the long short ratio. So these two things can show you first when price goes against the greedy speculative sentiment of the market, and what is the current speculative sentiment of the market. So if you go right here to live charts, you can even see those things live. So over the chart and not necessarily just in this panel right here. So let's go. Let's see how long does it take. All right. So right here, we have the long short ratio down here. And this is just the overall amount of liquidations for Bitcoin, for example. And we can see that usually as long as the long short ratio keeps climbing up in a downtrend, then it just keeps trending down, right? And once people get a little less greedy, then it kind of starts trending up again. So right here, long short ratio is going up, going up, going up, going up, right? Going up, going up, and the price is going sideways down, right? And once the long short ratio goes down, then we see the massive bump up, right? Usually, and this is not like a one-to-one correlation again, but usually the market goes against the general speculative sentiment, right? When you see those huge long short ratios, and right now it's quite high, which to me is relatively concerning. So right now it's at 4.73 longs for each short, then it usually goes the other way. So if you were going to believe in the long short ratio, then it at least seems maybe for now we're going to head down. Now, I don't think you should use these things, these sentiment. This is kind of sentiment analysis, okay? You shouldn't use these things by themselves. You shouldn't use just because the long short ratio is high, I should short, for example. You shouldn't.
Right. They could all be right.
Yeah, they could all be right. Exactly. And you should seek confluence from it, from technical analysis, from other stuff. So for example, from moving averages, let's say a moving average was kind of right here, doing resistance to the price, then you might short it right here and place the stop maybe somewhere right here and wait for it to go down, for example. Now, again, don't use it alone. Try to see confluence from it from other sources. This is also important. It's not really confluence if you're just seeing the same thing with a different name, right? Yeah. I have talked about this a lot because I think it's very important that if you have a bunch of indicators for technical analysis on your chart and they're all saying the same thing, then why don't you have just one? So if you have the MACD, the stochastic RSI, the RSI, and a bunch of oscillators all in the same chart, just because they're saying the same thing at the same time doesn't mean it's a stronger signal, okay? Because they're telling you the same story with a different skin on top of it. You should see confluence from things that use different factors to be calculated, right? Not just strength. Maybe use a moving average, maybe use the sentiment analysis. Okay, yeah, sure. The long short ratio might be a very interesting thing to see, but again, don't use it alone because you're probably gonna get, screwed around, right? And one thing that's also interesting to see, to look at, is the liquidations. Okay, the liquidations, they might tell you, and this is especially just for short term, very, very short term, so day trading and that stuff, especially on Bitcoin, since it has more volume, the liquidations might tell you good points to take your profits. Okay, so when a lot of shorts are liquidated, then maybe you should take profit on your shorts, on your longs, sorry. So, and when a lot of longs, when a lot of longs are liquidated, then you maybe should take profit on your short. So right here, you can see a lot of longs liquidated, then you would have taken profit right here, and it kind of goes sideways for a while. And same goes down here. A lot of liquidations from right here to right here, then you take profit on this move. Now, again, this is for day trading. If you try to do this with anything that's not just considering the ultra short timeframes, it's not going to be as good because liquidations don't matter as much in the longer timeframes, right? But on the shorter timeframes, liquidations can be pretty useful to, just gauge when it's a good time to take profit and when it's a good time to keep on a position. So right here, for example, would be an example of taking profit on a long. So a lot of shorts liquidated, then you take profit on your long, and it's right here. And right here, it's a lot of longs and a lot of shorts. And this is why you should also see confluence, because this was a candle that was, a doji, we call this type of candle. So it's basically a small candle that has wicks up and down. And in this kind of situation, then maybe it's not as wise to take profit because this maybe says a little bit about the indecision in the market, but that's a whole other talk. And yeah, again, leverage and that stuff, I think it's only more meaningful to the longer time frames and not the shorter time frames. Sorry, the other way around, the shorter time frames and not the longer time frames. Okay, let's see the image that Jorge has just sent me. Yeah, but the RSI confluence, let me just post that. Yeah, exactly. If the RSI says one story and all the other indicators that are considering different things are telling you another story, then, well, maybe just your analysis on the RSI is wrong. Okay, use multiple factors for confluence. That's the main idea I think you should get from analysis, that you shouldn't trust just one indication, just one number, but you should seek multiple sources and try to find the times where it talks and when it tells you the same story. Okay. All right. It's been nice, y'all. If you have any other questions, I can answer them now. If not, I think we can end it here.
Good. I'm good. Thank you. This is
Okay.
very helpful.
Thanks, Tchello.
Thank you very much.
Okay.
And congratulations on your coding.
Oh man, yeah, I'm very, very proud, dude. I'm very, very proud. And I'm gonna keep doing more. Okay, I'm gonna keep doing more as I have ideas. Now that I know coding, nothing can stop me. Okay. All right.
Charge a lot for your premium
Oh,
services.
I'll never charge anything. Everything that I make will be open source always. Okay, always. You can steal it if you want. TradingView doesn't allow you just to copy and paste an indicator. They will remove your indicator if you do that. But you can just copy and just not even give me a like on TradingView if you want. I'll always do everything open source for everyone. Okay, so no one has to pay, because I don't pay for TradingView. Why would I make my indicators pay? It makes no sense.
Yeah.
All right, I'm gonna stop the share and we can end it now. Thanks everyone. Today was awesome. Bye.
Bye.
Have a good night.